SpaceX could become one of the most valuable companies on Earth. But if Warren Buffett analyzed SpaceX today, would he actually invest? Let's run it through Buffett's investing checklist and find out. If Warren Buffett were to invest in SpaceX, the first thing he would check is whether he is able to understand the business or not. If he doesn't understand it clearly, he won't invest in it. That's it. How has the business been making money? What products and services are they selling? Those are important questions for him. If we take Amazon AWS, that business is hard to understand for most people. People have no clue what they are doing, what products they are selling, or who their customers are. But if we take Coca-Cola, that's pretty easy to understand. Even a kid could explain what they are doing. They have a product called Coca-Cola. It's a drink. The company makes it and sells it to customers, and they make money from it. Pretty simple. So that's the concept. Likewise, Warren Buffett picks simple businesses. Let's see what SpaceX does. If we take SpaceX, they have 4 main services, and they are making money from these businesses. The first one is Starlink. SpaceX has thousands of satellites revolving around the Earth that provide internet service all around the world. If you are at sea, you can access their internet. If you're in a remote area like Bear Grylls, guess what? You can still have internet, but you have to pay a monthly subscription, just like Netflix. So that's one way SpaceX makes money. And they also sell those Starlink dishes. Second, they send things to space. They send satellites to space, and they are also sending people to space. Private companies may track weather, so they send satellites to space. Startup companies may send satellites for scientific research. Governments may send satellites for military operations. They also deliver NASA cargo to space and send people to the ISS, International Space Station. So when SpaceX launches for companies and governments, they make money from those services. Third, they have a program called Starshield. If a war happens, soldiers need communication between each other. They can't rely on weak ground networks, so SpaceX provides communication services for the military. They can also track what other countries are doing, like when troops are forming and where ships are moving. If any country launches a missile, Starshield could detect those missiles. So for these military contracts, governments pay money to SpaceX, and that is recurring revenue for SpaceX. Fourth, SpaceX owns xAI, the company behind Grok, which is similar to OpenAI's ChatGPT. You can ask any questions, and it earns revenue from users and businesses that pay for access to advanced AI models. xAI is also connected with X, formerly Twitter, which generates revenue through advertising and premium subscriptions. So that's SpaceX's business model and how they make money. We need to clearly understand the business, and that's exactly what Warren Buffett does. He doesn't blindly invest in any business. If he doesn't understand the business, he avoids it. The second thing Warren Buffett would check is whether SpaceX has a moat. A moat refers to a competitive advantage that protects a company from competitors, much like a castle moat protects against attackers. It allows a business to maintain high profitability or market share over time despite competition. For example, if we take Facebook or Instagram, they have strong moats. Why? Because everyone is already on Facebook and Instagram. Even if a new company builds a similar social media platform, most users don't switch. That's the advantage Meta have. If we take Apple and Coca-Cola, they have strong brands. Even if competitors create great products, customers don't switch quickly because these companies have built trust by consistently providing quality products. When a company has a moat, competitors can't easily eat into its profit margins. They have to work extremely hard to enter the market. So that's the concept. Warren Buffett looks for moats. If we look at SpaceX, it has several moats protecting its business. The first moat is reusable rocket technology. Before SpaceX, if a company launched a satellite into space, the booster would fall into the ocean and be lost forever. Millions of dollars worth of booster would be wasted after a single use. SpaceX changed that. They developed reusable rocket technology. After delivering the payload into space, the booster can return and land safely back on Earth. SpaceX can then reuse that same booster again and again for future launches. This dramatically reduces launch costs. If you want to send 1 kilogram into space, SpaceX can generally do it at a lower cost than most competitors. As a result, customers love SpaceX, and the company has captured a large share of the global launch market. That's the #1 advantage SpaceX has over its competitors. Many competitors are still years behind in reusable rocket technology. As of 2026, SpaceX has completed hundreds of reusable rocket flights. Meanwhile, competitors such as Blue Origin are still far behind in launch frequency. The second strong moat SpaceX has is Starlink. SpaceX has deployed thousands of satellites around the Earth. Most companies can't easily replicate this because launching thousands of satellites is extremely expensive. SpaceX's reusable rockets allow them in the first place to launch these many satellites at a much lower cost. You can clearly see how deep SpaceX's moat here. So, if a top investor like Warren Buffett were analyzing SpaceX, one of the key things he would examine: how strong is SpaceX's moat compared to its competitors? Can any of them realistically catch up? These are the kinds of questions investors like Warren Buffett ask before investing. Third thing Buffett would check is management. Buffett looks for honest, capable leaders who allocate capital wisely and can execute over long periods of time. If we look at SpaceX, the obvious person is Elon Musk. One reason investors respect Elon is his ability to execute extremely difficult projects. Back in 2008, SpaceX was on the verge of failure. The company had suffered 3 consecutive Falcon 9 launch failures and was running out of money. At the same time, Tesla was also struggling financially. Elon also got divorced. Many people thought both companies would go bankrupt. Then SpaceX's 4th Falcon 9 launch finally succeeded. Shortly afterward, NASA awarded SpaceX a contract worth billions of dollars, helping save the company. That moment completely changed the future of SpaceX. Since then, Elon and his team have repeatedly achieved things many experts thought were impossible. Another thing Buffett would probably like is management's willingness to reinvest profits into long-term opportunities instead of focusing only on short-term earnings. Projects like Starlink and Starship require enormous investment today, but management believes they can create much larger impact in the future. However, Buffett would likely have one concern. SpaceX is heavily dependent on Elon Musk. A significant portion of the company's vision, engineering direction, and public image is tied to a single individual. If something happened to Elon, or if he became less involved, investors would naturally question whether SpaceX could maintain the same pace of innovation. The next thing Warren Buffett looks at is whether the company has too much debt. Warren Buffett prefers companies with low and manageable debt. He looks at whether a company can comfortably pay its debts. Historically, SpaceX has not relied heavily on debt to fund its growth. Instead, it has raised capital through private investors and reinvested cash generated from businesses like Starlink and launch services. In recent years, as I was recording this video, SpaceX has taken on more debt while investing heavily in long-term projects such as Starship and AI infrastructure. However, many analysts still consider this debt manageable because the company continues to generate significant cash flow. Buffett likely would not view the current debt as a major concern if he believed the investments were strengthening the company and the debt remained under control. So these are the main things Warren Buffett would look at before investing in any stock. Now let's get to the big question. Would Warren Buffett invest in SpaceX? If Buffett analyzed SpaceX, he'd probably love the moat, strong management, and long-term potential. However, because the business operates in a rapidly changing industry with uncertain future cash flows, he might admire the company more than he would want to own the stock. That's it for this video. If you want to learn more about the stock market, check out the other videos on my channel.